Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. The Reserve Bank has kept the official cash rate at 4.35% since November of last year. And despite moves by many central banks around the world to cut rates or start cutting rates this week in the case of the Fed, the Reserve Bank is likely to keep the benchmark here at that level for a few months yet. But in terms of the interest rates we're paying on loans and the rate we are paid on our savings, banks and other lenders don't actually need the Reserve Bank to move in order to change their own rates. So I wanted to find out what's on offer right now, what the big banks are charging on home loans, who's the most competitive, where the best rates are on offer, and what it means for those with savings in the bank. Rachel Wastell is the personal finance expert at financial comparison site Mozo. Rachel, welcome back to Fear and Greed.
Thanks so much for having me, Sean.
I don't want to make this personal or anything, but I have fortunately had half my home loan tied up in a fixed rate loan, and that is rolling off after 4 years, fairly soon. Where should I be looking? Where are the best deals at the moment, at least in the home borrowing area?
Yeah, so you're very lucky, I guess. There are a few people probably still on those fixed rate loans that are
prescient, Rachel, prescient. It's not luck, it's prescient. Go on.
Yes, and I guess jumping off into a 6-7 from what are you on, like a 2, 1, 2, 3?
2.19.
Yeah. So that can be a bit of a shock. But the good news is that there are a lot of lenders who are being quite competitive as we get into the spring property season, and kind of it is a bit busier, and lenders are kind of competing for people at this time of year. So that's great news. And we actually have seen a lot of the big banks coming through and making some pretty competitive offers for both fixed and variable. So in the variable space, the lowest we have from a big four, if you kind of want that security of a big four bank, is CommBank does have a digital only loan for 6.19%. So that's quite competitive. But when you do look at other banks on offer, so you can get rates starting with 5 still, you do kind of wonder whether you want to go with a smaller lender.
Yeah.
And I think that, I don't know if that's a concern for you, but I know that's a concern for a lot of mortgage holders, whether they do shift from a big four to a smaller lender.
Okay, so if the major banks are offering cheaper loans through their digital channels, and that kind of makes sense, it's probably cheaper for them rather than people coming into branches and that, if people do that anymore. Do you get all the bells and whistles on those sorts of loans that you might get on your typical standard variable rate at Commonwealth Bank or any of the other big four?
Yeah, so that's where you really do have to look at the fine print, because a lot of these smaller digital-only lenders won't offer the ability for extra redraw facilities, extra repayments, the offset accounts. There are some really competitive smaller brands that are, affiliated with or backed by the bigger banks, say Up, which is a brand of Bendigo. They do have the ability to have offset accounts, and they do have quite a competitive rate of 5.95% for people with deposits of 10%. So I think there's a few ways that the Big Four's trying to kind of expand their business to get those digital brands offering products that still can provide what the standard offering can.
Okay, so what about the smaller banks? So what are some of the cheaper loans you can get?
Yeah, so some of the smaller lenders, the leading rates we're seeing is at around 5.89%, which is obviously below the 6 and quite attractive rate. But there is that concern, I guess, from borrowers that they are going with those smaller, less known brands. But if you're looking for the security from a big four and you do want a lower rate, you've got Unloan, which is backed by CBA, which is 5.99%, Ubank, which is backed by NAB at 6.14%, and then Timely, which is backed by Bendigo for 5.94%. So there are still rates available starting with 5.
The moral of the story, shop around, really.
Yes. And when you're looking at a loan of hundreds of thousands of dollars over a 25-year term, that's, that small percentage point can actually equate to tens of thousands of dollars more in interest you're paying over the course of the loan.
Stay with me, Rachel. We'll be back in a minute. My guest this morning is Rachel Wastell from Mozo. Okay, so we've been talking about variable rate loans. What about fixed rate loans?
Yeah, so the fixed rate space is, we've seen a number of cuts coming through in the fixed rate space, and that's because the expectation is that the cash rate will come down. So banks are now trying to hedge their bets and they're trying to offer attractive rates that may end up being higher than the variable rate ends up in that space of time. So we've seen a lot of cuts in the 3-year fixed rate department, and the big four banks are actually quite competitive. They've, except for ANZ, Westpac, CBA and NAB have all cut their fixed rates since July when NAB started it. So CBA has a rate starting with 5 for 3-year fixed, 5.89, Westpac 5.99. But I guess when you're looking at a big four, once again, you're probably not going to get the lowest rate. And we actually saw a very small lender, Southwest Slopes Credit Union, SWS Bank, they introduced a rate last week of 4.99.
Wow. A fixed rate?
Yes, correct. A 3-year fixed rate.
Wow. So what is it? Southwest
Slopes Credit Union. They've rebranded to SWS Bank recently. So,
Wow.
Yeah, and that's the first time we've seen a rate starting with 4 since June 2023.
Okay. So you sort of, what you're sort of comparing over the 3-year period is whatever the variable rate you would pay on average over that 3-year period versus the fixed year rate. And at 4 point something, or anything under 5, you have to consider it. Now, I'm just rushing to tell listeners we are not an investment podcast. Make sure you go and see your lender before you make any of these sorts of decisions. Okay. So at least we've got home loan rates going in the right direction. What about deposit rates, savings rates?
Yes. So deposit rates we've seen a slew of cuts come through, specifically with term deposits. Now, that's because with term deposits, it's kind of like fixed, right? Like the bank needs to hedge their bets and figure out where they think rates will be, because when you get a term deposit, you're locked in and they will pay you that rate for the entire term. So we are seeing term deposit rates come down. So if you can afford to lock away that savings, it might be worth looking in to get a rate, because we used to see recently we were seeing 2 to 5 year terms over 5, and now you cannot get a term deposit. On our database, we can't see a term deposit over 5% for that 2 to 5 year term.
Right.
So you're looking at around 5% max for like a 1-year term deposit. And the big banks are around 4 or 4.5 in that 1-year TD space.
So who's the 5%? I'm interested in who that is.
Yeah, so we've got 4. So you've got HSBC, Kudos Bank, GNC Mutual and Heartland are all offering 5% for that 1 year.
Okay. And then when you go out for longer term, 3-5 year deposit rates, what are they looking like?
Yeah, so they're maxing out at just over 4.5, so around 4.75, 4.8. And then the further you get in the future, about 4.6 at the moment. So those longer term deposits are becoming less attractive, I guess. But I think it's important to think about, first of all, when you're getting a term deposit, I want to make sure that consumers make sure you can lock that away and you don't need it.
Yeah, because you can't get it.
No, you might negate all interest, and you also might get a pretty hefty fee. So
yeah, okay. So talking about this, we've got interest rates coming down on both sides, on savings and on home loans. If you look hard enough, you will find some pretty good home loan deals. Once the Reserve Bank starts to cut interest rates, which will be into next year, is it likely that rates will keep falling?
Yeah, so I think what we'll see the fixed especially start to come through as we get closer to a cut. And in that home loan space, I think if the RBA cuts and the banks don't move, they're going to be at least the first 1 or 2. Banks are pretty much going to pass that on, because they won't want to be risk being called out for being some of the when people are going through a pretty hard time. But I think, TDs, we've seen a lot of movement, so term deposits, but I think the online savings rates will change very quickly after a move is made. We've seen ANZ recently cut their savings last week, but it was a very slight change. And overall, the only real kind of cuts we're seeing in the savings space are by those rate leaders, who, even if they cut, are still quite competitive. But once the RBA cuts, that's when you need to kind of check your savings rate. And if you are with a leading savings rate now, so if you're with a bonus rate, we've got Maybank, for example, is offering 5.55, and then you've got ING and a few other banks offering bonus rates of 5.5. If you are with those banks, just keep an eye on it, because they're the rates that will probably move before the RBA does.
Rachel, thank you for talking to Fear and Greed.
Thanks so much for having me, Sean.
That was Rachel Wastell, personal finance expert at financial comparison site Mozo. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.